everyone. Dave Landry here from DaveLandry.com. This is Trading Simplified. So what are we talking about? Well, I went back and looked at the old shows, and I know I spent a lot of time in trading psychology, and it's something I really want to come back to. But I was surprised at how much ground we've covered so far, money management, setups, and I thought it'd be important to go back in and take a look at the methodology in action. And in doing so, I'm able to flesh out a lot of little concepts like entries and stops and taking partial profits, and the fact that it, spelled with silent SH, does occasionally happen, unfortunately. By the way, I do take requests. I am a little behind on those requests, and one thing that's kind of interesting is a lot of the requests, he tried to say, that I have received in going back and looking at some of the old shows, I've actually covered those things. So I would encourage you to go back and look at the old shows. If you are a member of DaveLandry.com, a gold member, I'd be willing to bet that 99% of those requests are handled there. And if not, put in a formal question, and I'll be happy to get to that. If you're looking to find me, you can find me at DaveLandry.com. Obviously, if you need to talk to me, DaveLandry.com/contact. And if you want the slides from this show, plus my books in PDF format, limited access to the members area, which includes a market timing course, and a plethora of other stuff for free just to get to know me, go to DaveLandry.com/StockCharts. So I want to start today with some mystery charts. Now, mystery charts are a chart that I actually recommend, and these are live charts, so to speak, live setups coming into today. And today we have 4, and that's a big number. Usually we have 1 or 2 setups coming in today, but based on the action in the overall market, we've got 4. Now, I doubt that all 4 will trigger, but I want to show them to you, and then we'll follow up on them in upcoming shows. Now, in this particular case, I wanted to show you with the Landry light indicator, and that just counts the number of bars where the low of the bar is greater than the moving average. Now, I asked the programmers, and they obliged to allow me to change that moving average. So we're using a 30-day EMA in this particular case, and our reference is set at 10. Now, the reason I have it set at 10 is if you go in and read the Layman's Guide to Trading Stocks, I talk about Landry light pullbacks. And in that book, I used a 20-day EMA, which I was noodling around with quite a bit in the early 90s. It's something I really kind of fell in love with. I know you probably want to party with me. But it's really a cool EMA, the 20 EMA that is, and I also mess around a little bit with the 30, and lately I've been using the 30 quite a bit, and I find it quite useful to help keep you on the right side of the trend. So again, this just counts the number of days that we've been above that moving average, and one thing I showed you last week in last week's show is that sometimes if you wait for a little kiss of that moving average, or when the Landry light has been trending nicely and comes back in for at least 10 days or more, it could be a good little setup, and it's a good little qualified, and I'm using the word qualified because I don't believe in mechanically quantifying everything, but if you can kind of qualify a pullback, especially if you're a little newer to trading or if you may have lost your way a little bit like we all do sometimes, come back to something simple and come back to something more qualified for your trading. But anyway, nice little pullback, nice uptrend, and nice little pullback to the 30-day EMA. We also had a TKO back here. Now keep in mind, this setup has been on my trading service for several days, since the TKO in fact, and so far it hasn't triggered, but we're going to continue to follow along with it for a few more days, and if it begins to fail miserably without triggering, then no capital is put into harm's way, and I'll flesh out entries in a little more detail in a few minutes. So here we have the kiss of the moving average, TKO. Our entry is above this TKO high in this particular case, and our entry is down here below the low plus a little bit of wiggle room, and so far obviously no trigger on this one. And this is coming into July 28th, 2020, and so far it hasn't triggered today. It was posted in my trading service on Monday night, July 27th. Now, I get a lot of questions about where's the IPT, and again, I did cover this in prior shows. The IPT, or the initial profit target, if you're new to the methodology, is simply the entry plus the entry minus the stop. So if the entry in this particular case is 12 and the stop is 10, That's 2 points. You add that to the entry, which gives you an IPT of 14. And that'll make sense as you see it in the spreadsheet. So in this particular case, you can see we pulled back to the moving average after a really nice uptrend. And notice we have a little red downside Landry light, but that's okay. The market has just corrected, and as you can see, it's had a pretty good run in here. But obviously, if that continues to get worse and we don't trigger, then I would become concerned. In fact, I would take it off as a setup. And again, no capital would be put into harm's way. Now, the reason we put an entry above the market is to make sure the market is moving in our favor. By the way, I often use the word market and stock interchangeably. I think stocks are more inefficient than other markets, which makes them better for trading. That is, at least the stocks I like to trade, generally smaller cap stocks in a market like now, and then possibly big cap stocks on the short side when the market is in a little bit of trouble, because those efficient stocks can become inefficient. Now, before I digress too far, that's probably a lesson for another time, but I just want to kind of point some of these things out as I think about them. Anyway, stop is down here. So far, no trigger, so we're just kind of sit and wait for that entry on that one. Here's the third setup. Once again, you can see nice uptrend. In fact, notice that the price board is actually accelerated higher. We pull back to the moving average. Now, keep in mind, every pullback that I trade won't necessarily pull back to the moving average, but I just thought it was kind of cool that the 4 setups coming into the day all form this Landry light pullback pattern, and it's a pattern that's very easy to recognize. And I occasionally amaze myself with how simple trading can be. I didn't say the word easy, but how simple trading can be. Sometimes just a pullback to a moving average is all you really need. Now, one more point, even though we're using these indicators in here, I always start with a blank chart first before I add a moving average. I need to like the blank chart first before I do any indicators, and the only indicators I use, which are available in the plugin, which is free, by the way, are Landry light pullbacks, bow ties, and then occasionally I'll put in a volatility reading so I'll know where I am basis the overall market. And we talked about those in last week's show, so if you get a chance, go in and watch that, especially if you're having trouble sleeping at night. But you can see we have a little downside, Landry light, not the end of the world just yet, but so far it looks like the stock has potential to continue higher. But again, wait for that entry, and that's going to, again, help to avoid putting capital in harm's way. So entry, stop, and then, of course, the IPT would be those two. Now, this is a metal stock, and I'm a little bit more lenient when it comes to a metal stock, so it's not quite as perfect. You can see that there is a gap in the setup, or I should say the gap in the stock, but it did have a pretty amazing trend before it pulled back to its moving average, and it took off again, and then it pulled back. And again, it's not perfect. It's not a perfect setup in the sense that A, there's that gap I just talked about, and B, usually I don't like a stock to pull back to its prior pullback, but this stock has ran so far, I think it's worth a shot. And again, you're going to want to wait for an entry on that one. And there's your pullback to the moving average. Notice that your Landry light disappears because there is none. On the upside, the lows have to be greater than the moving average for a green or upside Landry light. On the downside, the highs have to be less than the moving average. So entry is here. Stop is down here. And then again, initial profit target would be entry minus stop plus the entry. All right, let's continue with the methodology in action. What I want to do first, before we get into recent trades, is I want to talk about the best, the missed, and the worst trade of the week. So this particular stock here, nice uptrend. It begins to accelerate in its uptrend. It pulls back. And notice that it did begin to rally. Now, this is actually a pattern I call a trend pivot pullback. When a stock rallies and comes back in at a pullback, a bit of a failed rally out of a pullback. If you're newer to trading, in addition to something like the Landry light pullbacks we just talked about, maybe trade these trend pivot pullbacks. And this way, you miss that first false entry, and it's possible that the stock might just continue to implode and you avoid losing trade. Obviously, the downside is that you will occasionally miss a big winner. However, if you are newer to trading, the good news is your trades will be a little bit more accurate because you'll miss a lot of those false moves, and that might give you some confidence to be able to slowly expand into other patterns over time. Kevin Haggerty, he's no longer with us, but he's a super nice guy. I think some of you guys know him. Every now and then I'll talk to one of the old timers out there and we'll talk about Haggerty. But I talked to him once and he said when they get a new guy into the trading room, they only let him trade second signals. So the first signal, like in this case, would have been that little bit of a rally out of a pullback. The new guys can only trade second signals. Now they're not catching as many winners as maybe somebody that's a little bit more seasoned taking that first move out, but their accuracy is a little bit higher and they're able to build the confidence through that. So kind of borrowing from Kevin Haggerty, I think the secondary signals after a first false signal will be a good way to ease into trading. And if you're losing money in a drawdown, as we all go through on occasion, sometimes it might not be a bad idea to back off to something simple like second entries or maybe even some simple patterns. And then once you start making money again, then build that confidence back up. So here is the stock. It was in my Landry list. This is a list that I publish every night in my trading service. And these are the actual stocks that I trade, the official recommendations or in the spreadsheet to the right. And that's where a lot of the mystery charts come from, or I should say all of the mystery charts. I make an effort, and I reserve the right to occasionally show you something that I did not trade or did not recommend. But usually anything I mention in one of these shows, I have recommended or mentioned ahead of time. And ideally, it's something that I myself have traded. So this stock begins to take off, it triggers, and then it blasts higher, and it gets bought out. So this is really exciting. Well, exciting if I wouldn't have missed the trade. You're probably thinking, well, why are you showing me missed trades? Well, because it forces me to feel that pain and realize that I should have been in this particular trade. And on that day, if memory serves, I was off chasing some rainbows. There were a lot of hot stocks that were moving really fast, and I wasn't paying attention to my own stuff. And shame on me for that. Now here's another stock. This one, as you can see, nice little accelerated trend higher. This is one of those weed stocks. Nice little pullback in here. And you can see that it was also on my Landry list for today right there. You have to kind of squint your eyes, but it's in there. And let's take a look at what happened. So nice little trigger. And in this particular case, what I did was I avoided that opening gap and let it come back in a little bit. And then I looked to take a second intraday entry on this. This was not something that was an official setup, nor was it something that I wanted to go after as a setup in and of itself. But I thought it was worthwhile for a possible day trade that I could turn into a longer term trade. So this is the best trade of the week, and hopefully so far, because the week ain't over yet, right? So this is what it looks like. I did take this across multiple accounts, but I wanted to show you the timestamp and the trade size and all. For this is roughly what I would use for a model account, which is around 100K. And you can see that I peeled off 300 shares intraday for a profit of about $300, and then I went ahead and kept the remainder for hopefully a lot more. Now, one thing I want to really caution you in doing is if you're just kind of an intraday trader, or a day trader, I should say, you don't want to take things home if you're just day trading. But if you're a position trader like me, who occasionally goes in and makes an intraday trade, if you go into it, or if I go into it saying, okay, here's the thing, this thing looks great intraday, it's also triggering a daily signal, I'm going to go in, hopefully, and I know you should never use that word in this business, but hopefully get a little piece off, which gives me a head start on a potential longer term trade. But the point I'm trying to make is you've got to be really, really careful. I knew a day trader earlier in my career, and he would go in and get a little piece, get a little piece, get a little piece, get a little piece, and then he would just decide willy-nilly to hold stocks overnight. And it's a very dangerous thing to do if you're just a day trader. So if you get a day trade. If you're going to be a position trader, then position trade, and occasionally you could use a setup where you have both a daily trigger and an intraday trigger to get maybe a head start on a longer term trade. And that's something that I'll probably flesh out in a lot more detail in my Facebook group. So let's follow up on some recent trades that I recommended going back a couple of months, basically from the lows once we started seeing long side setups. And a couple of those are also mystery charts. So Chewy we talked about quite a bit. But you can see this is when Chewy was recommended. We had an entry at 42.70, a stop at 35, 7.7 risk. That seems like a lot, but that's what it called for. Now keep in mind that we do adjust the share size down. So notice the Mr. trade, the MR trade below it, we had only $1.90 risk. Now it was a much cheaper stock, so that percentage-wise was really huge. But we bought more shares, in this particular case, 1,053, and obviously you would round that one way or the other. But you can see that the share size goes down based on the point risk. And go in and watch the money management. Again, if you're having trouble sleeping at night, borrowing a line from Greg Morris. He didn't say this about my stuff. He jokes about his stuff. He says, don't operate heavy machinery after viewing. If you want to see the archives of all this stuff, so you can see that I'm not in complete hindsight on this stuff, you can go to davelandry.com/archives. So let's take a look at what happened. You can see nice uptrend. It looks a little choppy, but if you look at the chart, it went from 20 to 40 something over a fairly short period of time. So that's more than a double. The entry was here. If memory serves, I did not take that initial entry because it was a bit of a fake out, just an FYI on that, a little bit of an opening gap reversal. Stop was down here, but I did take the trade and I am still long for what it's worth. Initial profit target was up here. And this one really hasn't set the world on fire, but we did hit that initial profit target and we did trail the stop higher. So it's possible that this could still be a big winner. Now, you might be thinking, but Dave, it's gone sideways. Aren't you a trend follower? Well, it really hasn't done anything wrong. It's just kind of consolidating in here. Now, how do I define anything wrong? Well, if it hits the stop, that would be the wrong thing for a stock to do. I'm actually okay when a stock just kind of chops around in a range as long as I'm not stopped out, because the bigger the base, the bigger the launch into space is the way I see it. The stock gets a while to consolidate. People get used to this price level, and then all of a sudden you have a disequilibrium in price when, or hopefully when, it begins to take off. Now, I thought I was the person who came up with that bigger the base, bigger the launch into space, but I later found out that's Ralph Acampora that first said that. So let me give him credit. So here's another one in here, UBX, and you could see there were the initial parameters, entry at 920, initial profit target at 11, and then the original stop was 1.8 points below the entry. So this is what it looks like. This is a farmer mystery chart. Nice kind of cut pattern working in here. And then the stock pulls back. Does have a little bit of a TKO too to it. And that's in show number 2 or 3. I think I did a TKO. Entries here. Initial profit target is up here at 11. And then the stop is down here. So let's take a look at what happens. You can see it triggers, but unfortunately comes back in and takes out that stop. It, again, happens spelled with a silent SH. Why are you showing us losing trades? Well, I don't think any of the gurus ever showed you a losing trade, so I think it'd be important to do that, just so you'll know that you'd occasionally lose money trading. It's kind of funny whenever I speak in person, I'll say, and now I'm going to show you something that no one has ever showed you, and everybody kind of wakes up and sits up in their seat. And I say, a losing trade. Anyway, continuing on these lines, here's another one. This is another farmer mystery chart, ZI, and you can see the parameters in here. In this particular case, we had a 10-point stop. That sounds kind of ludicrous. Even ludicrous would say, hey, that's ludicrous. But that's what it called for. And you can see we only traded 200 shares in this particular case. We're risking 2% if stopped out. So on a 100K account, that would be $2,000. So you can see this stock, nice little rally. Big fan of IPOs. I have several IPO patterns that I really like to trade. One of them is the first pullback, which we had here, and you can see nice thrust higher, followed by a pullback. And again, you could go to the archives on this one So the entry was up here, stop is down here, and the initial profit target was up here. So extending those lines forward. Let's see what happens. So far, so good, looking good. Uh-oh, now we're starting to lose money, losing money. Bam, we get stopped out on the trade, which of course causes an F-bomb to be dropped, at least in my office. Now, if you look at the spreadsheet snapshot, we initially risked 10 points and we got stopped out at 8 points because we did trail that stop a little bit higher. So that's a 1.6% loss. Again, we use 100K as the model to keep the math easy. So not quite a full loss on that position, but a loss nonetheless. And again, it happens with a silent SH. So here's another recent trade, and I went back and grabbed the last, I think, 9 or 10 trades. Again, going back to the March lows. GAN, another IPO. You see a little pattern developing here. I like these IPOs. Nice little first pullback. We had an entry here, a stop down here, initial profit target up here. So again, we'll extend those lines and let's take a look at what happened. So on the bottom, I have my trailing stop. And you can see we did get stopped out after hitting that initial profit target. And again, going back to the Chewy trade, for instance, the idea is to trail that stop and allow it to gradually widen out and to hopefully, and I know I said that word hope again, but hopefully stay with the position for a long, long time. This one stopped out at a profit. And anytime I stop out on a profit and get that initial profit target out, I'm okay with that. And some people complain when they give up some of those initial profits. They still make profits overall on the trade. Now, I always tell them, just send me the money. Keep enough out. Go get yourself a massage so you can center yourself and feel a little bit better. But get that profitable trade out of your head. Send me the money. Send me that troublesome cash. My P.O. Box is P.O. Box 298, Abita Springs, Louisiana, 70420. And you know what? In 30 years, I've yet to receive a check. But I'm waiting and I'm hopeful. I'm hoping somebody gets so mad that they gave up some open profits and still made money. But I'm hoping it made them so mad that they'd send me that money. Anyway, obviously I'm being facetious. But when you do give up some open profits, which, by the way, comes with the territory, and it's a pain in the butt, I know that, it's aggravating, but it comes with the territory. You have to be willing to give up some open profits, as I say quite often, borrowing a line from, I think it was Fortune's Formula. They were talking about something else. They were talking about the Kelly Formula, but as far as trend following is concerned, you will spend a lot of your time less wealthy. So you can see in this position here, went up for a few days, you made some money, and then the rest of the time it kind of went sideways, and then it went lower and stopped you out. But this is what I call the better than a poke in the eye trade. Much better than a poke in the eye trade. So you can see the first half of the trade, we didn't quite get that 1%, and we made a little bit better than a poke in the eye, not much, on the second percent. And overall, 16% on the first low for the trade, if you want to look at it that way, and then 1.55% on the second. Now, here's another one. I really thought this one had unbelievable potential. Look at this nice uptrend. Look at a persistent move higher. It pulls back, nice pullback, nice deep pullback. And again, you can see all these at davelandry.com/archives. Entry here, stop down here, initial profit target up here. Let's take a look at what happens. Entry, oh, it's looking good, looking good. Oh, not so good. And then it comes down, and as you can see, stops us out of the position. And again, another F-bomb. Now, we did have some initial move in our favor, so we ended up with about a 1.6% loss in this particular case, too. Now, here's a live trade. You can see that we had a nice uptrend here, followed by a fairly deep pullback. This is an IPO. I'm a little bit more lenient on IPOs on the depth of the pullback and the number of days in the pullback. So entries here, stop is down here. Initial profit target up here. And again, let's extend those lines and let's see what happens. We get triggered in. It's rallying. It's rallying. It's rallying. Oh, it came so close to that initial profit target before coming back in. But there's still hope. And I hate to use that word again, hope. Now, by the way, when you get within a few cents of your initial profit target, it's okay to exit the position. And I was busy on these 2 days when that happened, and I did get a text from a client saying that he did get out half and wanted to know if that was okay. Absolutely. The first loaf of the trade, remember, we're dividing our trades into two loaves, a trading loaf and a trending loaf. The first loaf of the trade, we're just looking to get a swing trade out because many times that's all you get. We then bump that stop to break even in an attempt to capture a longer term trade. Charlie Kirk calls that free rolling when I showed him my money management. I think that's a good way of putting it. Playing with the house's money. I'm not really fond of gambling analogies, but for lack of something better, I think that's a good way of putting it. I suppose free rolling is also a gambling analogy. So there's a trade in the open portfolio, the APG, and we have a little bit of a profit there, and there's still hope. There's that word again, huh? Now, I wanted to bring back the Landry light for this particular one because this was an example I showed last week, OCFT. You could see we had a really nice trend higher, and we had a little bit more than 10 days of Landry light. I think we had 11 days of Landry light before it pulls back. And you can see that's illustrated down below. And notice that the Landry light goes away. You don't have either upside or downside once you have that little kiss of the moving average down here. And again, Landry light pullbacks were in a layman's guide to trading. And I feel like Oprah today. You get a copy, you get a copy, you get a copy. Everybody gets a copy. Just go to davelandry.com/StockCharts and put your information in. I'll send you a copy of the Layman's Guide to Trading Stocks. In this particular case, entry up here, stop down here, IPT up here. So extend these lines. And you can see it triggered. And so far, so good. Within a few days in the trade, we did hit that initial profit target. And then we take those profits. And again, that's 1% on the first loaf. And then again, hopefully much, much more. Now, one thing I want to point out, if you look at the OCFT in here, you can see we're up around 70% on that second loaf of the trade. And we were up over 100% just a few short days ago, or maybe about a week ago or so. And you can see we did have to give up some of those open profits. But the idea is by sticking with it via a trailing stop, there's a potential to stick with this trade for a long, long time. And I know I'm saying hopefully a lot, but you got to have some hope, right? But hopefully a year from now, when I'm doing a methodology show, a methodology in action show, that is, like I'm doing today, I'll show you this OCFT and I'll say, remember that OCFT back last July? Well, here we are and we're up 1,000%. So we can see. Let's just see what happens. So as you can see, that's the methodology in action, warts and all. And those are about the last 10 trades or so that I've recommended, and some of the actual trades outside of the recommendations that I've taken, or of course, in one particular case, missed. Since we have a few minutes, I want to show you something kind of cool. As I've said before, everything works better with trend. So let's take a look at the Nasdaq. We go back to last fall when it was a little choppy. You can see we had green and red in the Landry light. And again, this is the free plug-in. Green means the lows are greater than the moving average. Reds means they're not. But notice that when it's red and then green and red and green, kind of Jackie Mason, you probably want to stay out of the market. But then notice what happens when it stays green for a while, let's say 10 days or more, and it trends and trends and keeps going up. Maybe a little kiss every now and then, but that's okay. That's kind of a setup. Look at that. Look at that. I feel like Tiny Ellis. Look at that trend. It's huge. Got a little kiss of the moving average. Wow, look at that. Oh, this is the greatest thing. And great time. Oh, wait a minute. Okay, hang on. Now we're getting a little red, a little more red. Okay, so now not so good. We're getting red, but look what happens. That's okay. We short, right? It's going down. It's going down. Keeps going down. Okay. Retraces back up. And then now we have what? Green. Got some more green, a little more green, a little more green. More green, more green, more green, more green, still green, still green, still green, still green, still a little kiss. And then there we are as of today. Today is Tuesday the 28th, about the middle of the day. Pretty cool, huh? Well, as usual, I want to thank everybody for watching. Again, follow-up information, davelandry.com/StockCharts. If you need to reach me, davelandry.com/contact. So thanks again for watching, and may the trend be with you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.